Good morning, everyone. My name is Jeffrey Boutilier, and I'm the president of Ascent Strategy, and I'm delighted that you're all able to join us today for the second installment of the Business Resilience series. If you were able to join us last week, some of today's session might revisit information that we've previously covered, but we're also going to be engaging our panel in a whole bunch of new topics that hopefully you'll find relevant as you and your businesses seek to navigate the COVID-19 crisis. I want to begin by sharing a little bit of information about the series and how it came to be. First off, it's a community-driven initiative. So we have some great community partners that have come together to provide free access to experts and accurate, reliable information about some of the relief programs that are being announced, it seems, daily from the federal and provincial and even municipal government to try to help your businesses navigate this challenge. It's all volunteer. So we're delighted to have some returning panelists that are making themselves available today, and a new panelist who I'll introduce shortly. Obviously, everyone's very busy helping clients navigate this challenge. They're working hard in their own businesses to make sure their businesses can be successful in this difficult time. So now more than ever, we're really appreciative of everyone stepping up and giving so freely of their time to help everyone out. And finally, the series has one singular goal, and that's helping as many businesses as possible navigate this situation and get through to the other side. We know it's important right now that businesses have a very planful, strategic, purposeful approach to getting through COVID-19. We need to have businesses looking at their existing business plans and making fairly significant modifications to make sure that they can get through the current situation and ultimately recover once things begin to get back to normal. We know businesses are out there trying to consider a whole array of scenarios about how this might play out. We'll talk about a few today. What if this ends fairly soon? What if this goes on for a very long time? How might I make different choices about how I employ the cash I have on hand or decisions I make about my employees? All of those difficult and challenging things. And what makes the particular COVID-19 challenge quite different than other major financial struggles that businesses have been faced with over the years is it doesn't have a clear endpoint. And we're all sort of guessing at when things might start to get back to normal. And that makes it really, really challenging when we're looking to map out and project our cash flows and how things might evolve over time. So we're going to explore some of those topics today. We're also going to keep in mind that as this situation starts to resolve itself, and we've certainly seen that there's been some more optimistic headlines the last day or so after a pretty difficult week, particularly in the United States, that it's not as though we can flip a switch and go back to life as normal. And the degree to which businesses are going to be individually impacted by changes in consumer behavior or changes in what's permitted by governments in terms of operations is likely to vary somewhat. And you'll recall I used the analogy last day that for everyone out there itching to get back for a haircut, there's probably someone out there wondering if they really need to go as often as they once did. There's probably someone out there who maybe has some fear or concerns about attending a business where there's lots of human contact. And that extends to the hospitality sector, it extends to the service sector, and it probably extends to a lot of sectors beyond that. So it's something that we're all going to have to work through together. And as the series progresses, we're going to do our best to match the topics that we're dealing with the stage of the recovery that most businesses find themselves negotiating. Now, for this to work, we require some audience participation. Today, we have this expert panel assembled for you, some folks that in ordinary business, we'd all be craving to get access to. And to make sure we make the best use of it, we want to have some great questions from the group that's joining us today. I'm just going to explain very quickly how that works. So we're using the Zoom webinar platform. You'll notice if you access the menu bar associated with Zoom that you're going to see a Q&A button. And if you open that Q&A button, you'll be able to type in and submit a question to us. And as the conversation unfolds, I'll be able to direct that to one of our experts, and we'll let the panel dive in, and hopefully you'll get some real interesting insight into your question. If you use the chat function to submit questions, it's going to be quite difficult to be able to get your question heard, because those tend to get buried pretty quickly in the ebb and flow of the dialogue. We have another session coming up on the 21st, which is next Tuesday from 9 a.m. to 11 a.m. And the sign-up information for that will be available later today at our website, resilienceseries.com. So we encourage you to check that out. Again, the more participation we have, the more questions we have, the longer this series can continue and hopefully provide some help as we all work through this thing. I mentioned earlier, we have some great partners that have come together to make this happen. Our organization, Ascent Strategy, started putting these together early in the crisis, and we're delighted to have since been joined by the Regina Downtown Business Improvement District, Path Cowork, the Regina Economic Development Regina, and Regina's Warehouse Business Improvement District. So some great partners that have helped us expand our reach, helped us connect with great advisors to join us on our panel, and are helping bring to us some information from what they're hearing from you folks so that we can better program our agendas to suit your needs. Let's just chat a little bit briefly about today's agenda. And I want to preface this comment with a quick note that today's session is being recorded. Later today, it'll be available at our website, as I mentioned, resilienceseries.com. And just to that point, if you choose to submit a question, or if you use the function to request the opportunity to speak, you are consenting, if you choose to do that, to have that recording posted for the public online after the session. So in terms of what we want to cover today, a brief introduction to what the Business Resilience Series is all about. We just went through that. We're going to explore some details of the Canada Emergency Wage Subsidy and the Saskatchewan Small Business Emergency Payment Program. Now, unfortunately, the crisis has really encouraged governments to act a lot more swiftly than they normally do with big Canada-wide programs, and that's great. It unfortunately has not translated into better program names and easier acronyms. So that's a little bit tricky. So we're going to talk about those. And today I'm going to be joined by one of our panelists for that segment of the discussion, Craig Reed from Virtus Group, who I'll introduce in a moment. The Canada Wage Subsidy, or the Canada Emergency Wage Subsidy, was actually passed into legislation over the weekend through an emergency session. So whereas last week we were speculating on how some of that final legislation might look, we now have answers, and we want to go through those in some detail. Following that, as I mentioned, I'll introduce our panelists, and then I'll be moderating a panel discussion featuring your questions. So again, the more questions, the merrier. Now, a quick disclaimer before we get underway. Volunteer effort, obviously, to provide the community with information analysis and access to expert opinions at no cost. There's new information emerging daily. The situation continues to evolve rapidly, and every one of your business situations is going to be different. Therefore, this webinar series and any recordings that you access thereof is provided for general information purposes only and does not constitute any legal or professional advice. And we recommend that no one should act on the basis of anything they hear in this webinar without obtaining professional advice specific to their situation. So that being said, let's get into a bit of a recap of what some of the big relief program developments were over the weekend and late last week. And I'm going to unmute Craig and introduce him quickly. Craig, you might have to actually unmute yourself. Good morning, Craig.
Good morning, Jeff. Thanks for having me.
Thank you. So folks that joined us last week will recall that Craig's one of our returning panelists. He's a partner with Virtus Group, which is an accounting firm, an advisory firm here in Regina. And Craig has been doing an excellent job of staying current on the latest developments around the wage subsidy and some of these other government programs. I'm going to recap a few details and we can discuss what that might mean in practical terms for business owners. And also, if you have questions that come up during this part of the conversation, again, please use that Q&A function to get them to us, and we'll make sure we address those before we move on in the discussions. So this is a bit of an adjustment to the slide that we would have shown you last week, in that we now know some things for sure that were, again, just being debated late last week before Parliament reconvened for their emergency session. So what do we know now in terms of the Canada Emergency Wage Subsidy? So it is still a 75% wage subsidy for qualifying businesses. It's not limited, as you know, to small businesses or mid-sized businesses. Essentially, anyone is eligible for it, provided they meet the criteria. It was originally intended to be based on a 30% reduction in your gross revenue or greater over the same period last year. And that caused a lot of immediate or initial concern for businesses for a few reasons. One of the first points of feedback was that folks weren't really hit by the full impact of COVID-19 and closures and other restrictions to their operations until about mid-March. So there was a fear that perhaps the 30% would be difficult to qualify for in March. And there was also some concern about this idea of a year-over-year comparison to the previous month, particularly for businesses that maybe weren't operational a year ago, or for businesses that had scaled up their operations significantly and now found themselves with much higher payrolls and much higher revenues, and had obviously experienced a big loss, but perhaps not a 30% loss over the previous year. Perhaps their revenues were actually higher on a year-over-year basis, which is obviously something in business we like to see. So what we've seen is that the federal government has relaxed that a little bit. The new qualifying criteria for March is going to be a 15% reduction over the previous year, and then increasing to the 30% originally contemplated in April and May. They've also, as I mentioned, adjusted the qualifying criteria. So now you'll be able to actually compare your sales to January or February of this year to qualify, as opposed to having to rely on the previous year's revenue. Is that accurate, Craig?
Well, I think actually the January and February is an accurate point in that that's the evolution of it now, which is great to see. But it's an average of January and February. It's not either January or February. It's the average of the two. So, but to your point, Jeff, if you were increasing from 2019 to 2020 and you were at the sustainable level in January, February, then that was very helpful for you to be able to qualify. The thing that they do take out is extraordinary items, which is sort of subject to a little bit of interpretation sometimes. So, just because your revenue was, let's say, higher in January, February combined, or in March of last year, it may not necessarily qualify you, but in general, they're going to be, I think, pretty lenient with this stuff. So long as it's a regular course of business item, then it should be okay and qualify in terms of a reduction in revenue.
To that point, Craig, with extraordinary items from a revenue standpoint, what's normally considered for an average small business as an extraordinary item?
It would be anything that's not in the normal course of operations. So if you're a restaurant and you typically you do your meals and your drinks and all that stuff, that's going to be in the normal course. If you have an insurance loss that triggers a bunch of revenue in your business, that would be an extraordinary item, something like that. So, I mean, and by insurance, I'm talking like property damage. It's anything out of the normal course of business. And so it can be subject to interpretation, as I said, but I just think that it's kind of common sense will rule that in the sense of if you feel it's extraordinary, then and the average person does, then that'll be what'll qualify it. So it could be in your favor though too, if you had something come in the month of March of 2020 that you can remove from your March revenues, that could be a good thing for you as well.
Thanks, Craig. The program is going to be available for March, April, and May, backdated to March 15th, and effective for your payroll cycles through June 6th. One detail that hasn't changed is the qualifying limit. So it covers 75% of the wages up to the first 58,700, which works out to 847 per week. Basically, this means if you're someone or you have an employee that's making more than that 58,700, they're essentially going to max out for that benefit each week. It's going to be managed by the CRA. Now we're expecting applications in mid-April. We're kind of coming up on mid-April, and there's still not a lot of clarity on when this is going to be available. So that's somewhat concerning, but we would expect in a couple of weeks' time, we'll see the application process come online. We had a question come in from the field asking a little bit about how bogged down application processes are and how backed up the system is in terms of managing these applications. There's actually some encouraging news on that front. So the CRA has been managing the application process for the CERB benefit, which is the emergency benefit for folks that can't work right now, who have been laid off as a result of COVID-19, et cetera. And they've been doing that on a birth month type of rolling cycle. So they'll tell you if you're born in January, February, this is your day to apply or your week to apply. And they've seen a massive amount of applications, and the feedback has generally been that those applications have been very straightforward. They've actually got a pretty simple process, and they're getting processed very quickly. So the government in that particular circumstance has been taking the approach of, we're going to approve you, get you the money, and sort of qualify you after the fact. Obviously, the dollar figures involved for business subsidies are going to be higher, probably going to apply a slightly more aggressive lens in terms of evaluating those things. But I have a feeling we're going to see an effort to qualify folks and sort of sort some of the details out after the fact, which is somewhat encouraging. I was certainly a little bit concerned when I heard the CRA was going to be managing this process, not as a dig against the CRA, but just the huge amount of applications that they're going to see relative to their usual processing, which anyone that's needed assistance from the CRA can attest. It's not always a quick response. They field a lot of calls during a day. So some cause for optimism there. I don't know, Craig, if you wanted to comment on that. You deal with them more than I do.
I don't want to talk ill of the CRA, but in general, they're just people. They're trying to do their jobs, and sometimes you get people that are having a good day, sometimes a bad day. I've been impressed with the speed of them administering the CERB benefit. It is a sort of if you're phoning in, then it's a quick conversation with a rep, and then they pass you on to an automated service where you just hit your touch tone phone for 1, 2, or 3 or whatever the answers are. So you just have to assert that you qualify, and that gets you on the program. It is easier if you can use the online portals to do those applications, and that'll be the same case for this emergency wage subsidy. If you are set up as an individual for my account or my business account for your corporation or your partner, whatever your partnership, your business structure is, that will sort of hopefully speed the process up for these applications. The one thing we're seeing is that CERB is going well. The emergency loan account, that $40,000 loan that would be approved if you had wages over $50,000 last year, that just came live last Thursday, and I know from talking to some clients that the application process went fairly smoothly because you had to apply online for most financial institutions for that, and they were told that they were going to get the money in, or the access to the funds anyway, within 5 business days. So that was pretty optimistic and pretty good. Other loan lending options where there was outside of those government guaranteed options are a bit backlogged. Like BDC has been flooded with a lot of applications, and so those types of things are taking more time to process for them to get through all that workload.
We'll come back to that Canada Emergency Business Account in a moment and give people an update on that. But we've had the same experience with some of the more traditional credit solutions. The feedback on BDC has been just that they're flooded, and it's taking a long time to even get confirmation emails. So that's somewhat concerning. The bigger concern with the wage subsidy is obviously the timing of some of these cash flows. So folks have been in this now for 5 or 6 weeks, depending on the circumstance. People's cash reserves are getting depleted. The relief measures so far have been pretty limited. The only one that most businesses have been able to access, if they're a small business, has been the 10% small business wage subsidy, which we'll talk about in a moment because it's not additive or not able to be cumulative with this subsidy. But there hasn't been a lot of relief, and we're expecting that we won't see payments to folks under the 75% subsidy program until likely mid-May, and that may even be optimistic. So certainly as you're planning as a small business, you're going to want to keep that in mind. One interesting fact that we've learned a little bit more about, and Craig, I might ask you to comment on this, is it appears that this program will actually cover you if you do bring on a new employee. So certainly rehiring your existing employees, we know that that's going to qualify. But it appears that if you were to hire someone new right away here, or you were in a growth mode or feeling optimistic or needed some help, that they would be covered by the subsidy.
Yes, that's some good news in terms of labor forces are a little bit fluid right now, obviously, and some people that are off work, maybe that we're getting the CERB, if they come back to work, that can they probably have to repay the CERB benefit if they come back and start working, and so they may not actually want to come back to work depending on the nature of their pay level and things like that. So non-arm's length employees though don't meet that test. So by that I mean so Jeff and you and I are not related in any way. So if I hired you for our firm to come in and work, I think you've been too far out of the accounting actual hard details for too long to really.
That sounded like a job offer, Craig. I'm gonna hold you to that.
I want to make it very clear it's not a job offer. But if we were to hire you, then you're at arm's length from us, and therefore as long as you came back in and meet the test, then you'll be fine. The restriction on this though is that with non-arm's length people, so if I were to try to hire my wife, she's related to me, and if I control the partnership, which I don't, but one day hopefully I'll get there, then that's a non-arm's length salary, and CRA has put in rules around that only wages normally paid between January 1st and March 15th will qualify for that test. So there are restrictions on that, and you had to have a payroll account on March 15th to be able to apply for this subsidy, and that can restrict people from they're trying to prevent abuse in the sense of someone just setting up a payroll account and paying their 2 kids and their wife and their cousin and all these people. And so there's some reason behind it. It's just that it can be limiting in structures where business owners haven't been paying themselves wages and didn't have a payroll account, which is common with a lot of people that I work with. A lot of people take just dividends, for example, out of their corporation.
Mitch, I know you had a question for Craig.
Hi guys. Yeah, I was on a call last night and I had a few questions, or a few questions came up. And One was around the arm's length revenue drop, Craig, and it dealt with not so much individuals, but corporations that had a relationship, and one corporation paid fees into the second corporation. Could you control the flow of the cash if there is an event in the first corporation to the second corporation? Would that be considered a non-arm's length revenue drop?
Yeah, in general, if you are operating at non-arm's length and you just artificially, if you can manage your revenue downward, that's not allowed to be able to qualify for the CEWS. But if your revenue hasn't dropped because you're getting income from a non-arm's length party, like your corporation that you own 50% of and you own another 50% corporation, if your revenue is consistent from there, there's a look-through test to say that what are actually revenue is coming into our corporate group from outside, and you can use that as the test in determining whether you qualify for the wage subsidy or not. So I guess just to summarize, if you can't artificially drop your revenue to try to qualify for this, they have some provisions against that. But if you, as a group, you can choose to look at it as a group or as an individual entity to be able to qualify. So it's broader than we initially expected, which is a good thing. So that was sort of new information as of Saturday when the legislation came out, that they did expand that more than we had previously expected.
Greg, just on the question of scope and this being a bit broader than maybe we originally anticipated, the question came in, and I think we saw it last week as well, around whether or not this thing was going to cover contract employees or contractors. And based on what I've seen, I haven't seen anything that would suggest that it does. I'm curious if that's your take as well.
Unfortunately, yes, that's the case. The government, I think, is doing a good job of getting some stuff out quickly and trying to hit as many parties as they possibly can. People being paid on a contractor basis as opposed to an employee basis are scoped out of this, so there's no relief related to contractors or to dividend payments, as I mentioned earlier. So yeah, it's a problem in a lot of ways, because people sometimes structure their arrangements as a contractor too. Sometimes it's about mitigating risk for the business and the contractor, and in various different ways, and like moving CPP and EI risk off, things of that nature. And generally you do that with due consideration of all the positives and negatives of being in a contractor relationship. Unfortunately, this program does not help you at all if you are in a contractor position or you're paying contractors to do the work.
And to that end, Greg, we had a question come in from the crowd around whether the Canada Emergency Wage Subsidy would apply to owners' wages as well, wages in quotations. So presumably a non-traditional compensation structure. And this individual is thinking specifically of hospitality, one-to-one service businesses that are mandated to close and have no other avenue for income, like bars and nightclubs, estheticians, etc. I'm assuming that if they were paying themselves through dividends, that there may be some way to qualify, but if they were a contractor, they would likely not.
Yeah, if you've had to close your doors and you're not able to work, then you may meet that 14 consecutive day test for the CERB benefit. That pays you $2,000 a month, perhaps not what you were accustomed to. But if you were not on wages already, this 75% wage subsidy does not benefit you, unfortunately. If you were paying yourself a wage between January 1st and March 15th, even though you're an owner of the business, your wages can be covered under this program. But your wage from January to March creates a baseline. So if you normally take, let's say $2,000 a month as a wage, and then you top it up with dividends, then that $2,000 wage can qualify you towards your baseline wage, and then you can get 75% of the $2,000 amount. But that's less than the amount you can get in a given month. But whereas if you're paying, say, $100,000 a year in wages, which is well over the $58,000 maximum, then you can get the full maximum benefit to yourself if that was your normal pay structure.
So what about folks, Craig, sorry, just to complicate the question further, if you were drawing a nominal salary, just to get the RRSP contribution limit to the standard that you wanted, let's say, and you were generally bonusing yourself out, still taking it as salary, but taking sporadic bonuses of varying amounts, would those be included in the computation of what your sort of annual salary was, or would they be excluded?
The baseline test is really just the period between January 1st and March 15th. So in it can exclude 7 days of not being paid, but I think it's really just your normal payroll through that period. So I think if you're normally taking bonuses and some bonuses fell in that period, it would qualify. I'd have to double check on the exact wording of the rule though, Jeff. I can get back to you in a little bit on that.
Okay, we'll come back to that one in next session and just clarify it. I'm just trying to hit
I
you
have
with
a
the high,
couple of
trying to hit you with the high heat here, Craig.
follow-ups as well. Sorry, Jeffrey.
No, go ahead, Mitch.
Okay, so another question. A lot of people are confused whether or not they are required to make up the additional 25%, which I think I know the answer to, but maybe you can talk about that. And is there anticipated an end date that you will be able to backdate your application once we understand it better? So if you don't take advantage of it right away, can you then go back, in June and make an application going backwards, Craig?
So I'll tackle the latter part of that question and maybe let Craig tackle the 25% question. You have to apply before October 2020 is the deadline for the wage subsidy program. And it's important to note that because the program we're going to talk about in a moment, which is the small business emergency program at the provincial level, it has a different application deadline. And that's true of some of these programs. So it's a good question. You want to stay on top of it. But October 2020 to apply retroactively for the wage subsidy. On the 25% piece, they are asking that you attest, we haven't seen the application process yet, they are asking though that you attest that you're sort of doing everything in your power. And I guess where I'd maybe add to that question before tossing it to you, Craig, is given that there's no clear end in sight for this crisis and when life might get back to normal, and if I'm a business owner and I'm looking at my cash flow and saying, well, if this goes on for 3 more months, I can probably pay that 25%. If it goes on for 6 more months, I should probably hang on to that 25% so that I can continue to operate. That idea of doing everything in my power is pretty contingent on how long this thing takes to sort itself out. So how do you think business owners should navigate that?
Well, it's a difficult problem. And I think last week we talked about cash flow projections and how more important they are at this time in terms of making decisions to run your business and manage the cash flow. My understanding is that the wages have to be paid for you to qualify for the benefit. And there's provisions around, you can't say pay someone double what they normally pay and then because then you'll take it back later on when the subsidy is over. There's things of that nature. So my understanding is that you have to pay it and you can't really get out of it. And it's at least in this period. And then the plan would be that you get the money back within 6 weeks. So it's a difficult decision sometimes for a business owner because you need to actually get value out of the employee in some ways to be able to be willing to pay them that extra 25% or the 25% of their normal wages. Because if they're doing nothing, it may not really make sense to have them on salary aside from trying to help out your employee and keep your business continuity in place, just to make sure that your employees are going to be available to you and help the business when you come through this period. I think it is a matter though of just paying attention to where your cash levels are, where you project them to be. Can you get any revenues through? Like some restaurants, for example, they're considering going back to doing some takeout orders now that have been previously closed, but that's not an easy solution either. So there's no simple answer to it. I would just say that you have to manage your own cash flow accordingly and be realistic about what you can afford for these wages, knowing that the subsidy is still, as you said, they said mid-April, but today is April 14th, which to me is kind of mid-April. And so the applications aren't out yet, and it'll still be probably 4 to 5 weeks, like you said, for the cash to come. So it's not an easy thing necessarily, but it is giving us some hope in some cases for sure.
Mitch, did that get at your question?
Yes, thanks.
So I got to admit to our guests that have joined us out there in the internets, I'm a little offended that when I presented details of this program last week, there was absolutely no questions from the crowd. And now that we have Craig answering questions, it sort of seems as though people have realized that he might actually know what he's talking about because they're flying in. So a couple extra questions for you here, Craig, if you don't mind. A question from our friend Sean: because the revenue test period to qualify in terms of the revenue drop is different than the pay period window for salaried employees paid monthly or paid just once monthly, are they just going to use an average of their weekly wage to determine the subsidy amount? Because there's going to be a differential between your pay periods and your absolute fiscal months.
Yeah, that's a good point to highlight. The test on whether you qualify is based on the month of March compared to either the average January, February, or last March. But the period that test qualifies you for is March 15th to April 11th. So it's any wages paid over that period. So if you're on salary, then yes, it'd be a reasonable assumption that you earn X amount of salary each day that you're getting that you're getting paid, and you just get it paid in increments, maybe mid-month and end of month. But yeah, that'll be a reasonable assumption, and I think that would be probably the case. It's a 4-week period, so most people on salary are sort of their monthly salary would kind of cover that, and as long as they're getting paid from March 15th to April 11th, then that would qualify. It is weird though, especially if say you got biweekly employees, things like that. It can be a little bit more of a calculation to do than it otherwise would be.
So just to kind of cap off the emergency wage subsidy, and then a couple additional questions we'll take from the audience here before we wrap it up. Just a couple other details. So last week there were some questions, and we were pretty certain, I think Craig provided us an answer last week, around whether or not you could combine this 75% with the 10% small business wage subsidy that many folks have already probably claimed on their last payroll cycle. And my understanding now is that the subsidy that is remitted to you by CRA, if you do qualify, will simply be offset or reduced by the 10% that you would have already received through that small business subsidy. So they are non-cumulative. Is that accurate, Craig?
Yeah, you can't get both, but you can start with the 10% and then it'll just reduce your 75% later. So a lot of people are having to make their payroll remittance tomorrow on April 15th for the month of March. And it's a good thing for them to reduce their remittance by that 10% subsidy if they qualify, being a small business corporation, et cetera. And then they can it'll just basically when they request the 75% subsidy, when application becomes live, they'll say, okay, here's what you should have gotten, here's what you've already received, we'll pay you the difference.
Great. And then another question where you might want to chime in, Craig, is the understanding is that now that the legislation has passed, a couple new details on the qualification mechanisms or what's available to businesses have become clear. The first being a pretty straightforward one. So originally our understanding was that businesses were going to need to qualify through this application process monthly. It now seems as though that if you qualify for an initial period, you're going to be automatically qualified for the next period. So my understanding being that if you qualify for March, you're going to be automatically included as qualified for April, but not May. So you'd have to reapply in April for May. Is that correct?
That's correct, yes. It's a really interesting approach that they've taken, because some businesses will only have a 15% reduction, and maybe they're able to continue working a little bit through this period. So if you qualify for the period of March, that covers you from the 15th to the 11th, and then that automatically covers you for the next 4-week period from the 12th to whatever the next 4-week period would be. But your good point is right though, Jeff. You do have to reapply then for the third 4-week period that this sort of grant is covering. So if you don't qualify for the first one, then you can still apply for the second month, and that'll qualify, or sorry, the second 4-week period, and they'll qualify you for the third one as well. And I don't think we've highlighted, but normally accounting is done on an accrual basis. We're sort of, okay, I've earned this revenue, my customer hasn't paid me yet, but that is revenue to me, and I have accounts receivable on the books. You can choose to either do a cash basis or an accrual basis for this accounting of your revenues. So for those businesses that are doing a lot of work right now, for businesses that can't pay them in this period, going on a cash basis may actually get them to where they would qualify, whereas otherwise they wouldn't. I don't know about everyone else's business, but we're doing work right now that some of our clients aren't able to pay us because of their situations, and so we're trying to work with them on that. But that may make you may have that in your business as well, that going on a cash basis could get you to qualify, whereas otherwise you wouldn't.
Yeah, so definitely something businesses are going to want to touch base with their accountant on, because it sounds as though there's an opportunity to state their revenues in a way that might be quite different from how they've traditionally done it internally, and it could get them over the threshold, or under the threshold, I suppose. Just one last point to mention on this particular program that I know has given some business owners a little bit of heartburn. There are some nebulous rules and a little bit of nebulous language around some of the qualifying criteria, and there's a lot of flexibility in terms of how people can attempt to qualify themselves. People are obviously going to do their best to be honest and fair, but whenever there's rules and interpretation, people get concerned about getting into trouble if they find themselves perhaps unintentionally offside of those rules. And I know, Craig, the federal government has been very clear right from the outset, long before any details were available, that the penalties and punishments that might face business owners that were deemed to have abused the system, as you mentioned earlier, were going to be pretty draconian. And certainly the legislation backs that up. There's talk of major penalties, repaying much more than the subsidy you received. Jail time is mentioned for folks that are found to be particularly egregious abusers of the system. But for the average business owner that spends a lot of time staring at the ceiling at night around tax time, worried that something that they did all their homework and they had their accountant look at it, but for some reason the CRA is going to come back and decide that they made a mistake and hit them with some penalties and fines. Tell us a little bit about how we can play this one safe and qualify and not end up offside of some of these really severe penalties.
I like draconian. That was a good word, Jeff. That's good for a Tuesday morning. That's I like that. But the CRA always likes to carry a big stick, obviously, and they have to sort of incentivize people to behave in the proper way. And so the penalty right now is, let's say you got this benefit and you shouldn't have, then you'll have to repay the amount that you received, and they can apply as much as the 75% penalty. So there's two different penalties they can apply that meet that match up to combine to be 75% of the benefit you received. So if you receive $10,000 through the subsidy program and you're deemed to have gone and egregiously over the line in terms of trying to manipulate it to qualify for it, and you shouldn't have been qualifying, then they can hit you for $7,500 in penalties. So the CRA always wants to have that option available to them, and the situation involved will always sort of dictate whether they do apply it or not. So if you make an honest mistake and you're trying your best to work through this, then it's not that likely that they'll hit you with those sorts of penalties, or maybe one but not both, that sort of thing. And so it's just, I think in this case, when we've got like the definition of a non-arm's length party is, they say it's fact-based, but you can appear to be acting at non-arm's length based on acting sort of in cahoots with the business. That's a very technical term, I know, being in cahoots. But so I have a business where they've gone from a significant revenue down to nothing, and a minority owner of the business is the CEO, and so they were on they're going to be paying themselves wages coming through this and applying for the subsidy. If it's read a certain way, it could be deemed to be that they shouldn't have got the subsidy because they weren't on payroll prior to March 15th. If it's read a different way, then they are at arm's length from the business because they're acting in that capacity as a normal employee would. So I would suggest that if you're acting in good faith and you do your homework, I wouldn't be losing any sleep about the 75% penalty. They want it in place to punish egregious behavior, not necessarily just honest mistakes and things like that. So I think you just have to do your best for the business. And sometimes CRA risk is about an auditor assessing something that maybe not in accordance with the rules, and we have to accept that that's part of life. You can always fight those things and appeal them and go to tax court, all that sort of stuff. But the hope would be that doesn't really ever into it for any of our clients or any of the people on this webinar.
One issue I know a lot of business owners are confronting right now when it comes to this wage subsidy, particularly in terms of whether to hire people back or continue with layoffs that they might have been contemplating before the subsidy was announced, is this idea of this sort of a bit of a Sophie's choice sort of situation around whether it's better to bring the employee back on and pay them through the subsidy, even if the workload is minimal and they can't necessarily be productive, or whether it's better for the employee to have them laid off and enjoying the CERB benefit right now, which has been a fairly healthy benefit for a lot of people and is already out there and accessible. And I'm just curious, for a business owner that's faced with that choice, do we have any insight into sort of where the math lands in terms of when it makes more sense to bring that employee back and maybe have them sit idle versus proceeding with the layoff? Maybe Mitch, will start with you on that one.
Sure. It was a question for Craig, and it came up again in a conversation yesterday with some of my fellow business owners. And the question was, at what point in time does it make sense to just allow an employee to rely on the CERB or the CERB/EI benefit packages versus bringing them back at the 75%? And I think the cutoff was around $30,000 per year as an annual salary cut. Craig, do you have any math on that?
Well, yeah, the $30,000 threshold, Mitch, you're saying that then that average employee is they're making an average of $2,500 a month, so 75% is roughly going to get you to that, close to that CERB benefit, right? That's the math on that. And I think that's consistent. There's no magic to it. It's sometimes, though, it's an issue of does the employee want to work, or because sometimes being at home and doing nothing causes different friction. That's why I'm in the office today, just for a brief break for my wife. And I hope she's not watching this webinar. But anyway, so it's not a it's a very subjective thing, I think, in terms of whether you bring them back on or not. Because part of it is if the employee can make more money on the subsidy than the CERB, then that's sort of a no-brainer as long as you can get some value out of the employee. if the employee is going to make more money on the CERB, but you get no benefit from it, then it's a sort of a subjective point for you as an owner to say, is this worth it for me to incur this cost? And is there a way we can sort of work it out down the road with the employee? To me, there's no one right answer. I don't know if, Mitch, if you had any more points on that, or Pam or Cary, I don't know.
Okay, hearing none. Craig, I've got a report in from the crowd that you'll be delighted to know that a great deal of your credibility edge over mine is that you have a grayer beard, is what we're being told. So
It is a strategy of mine. I had the gray beard coming in, and I thought, boy, this is making people think I know way more than I do. So it's been a deliberate attempt to cultivate the chin whiskers. Yes. Excellent.
Good advice there for all advisors. One last question on this program before we move on to the new Saskatchewan benefit that's been announced recently is there going to be a clawback mechanism for either the CERB benefit or, more importantly, perhaps the wage subsidy if you were to hit certain revenue levels downstream? And my understanding right now is if you can qualify on an absolute basis, given the criteria that's out there, even if you had the best Q3, Q4 in your company's history, that there would not be a clawback. But Craig, I'm curious if you know more.
Yeah, nothing's been mentioned about clawbacks, except for situations where you should not have qualified and you sort of gamed the system to qualify. That's the only real risk. Now, we expect tax rates may be coming up in the future because the government's got to find some money to pay for all this stuff that's been going on. So it'll be a sort of down the road kind of a problem, or we'll be paying a little bit more in tax than we'd expect. But it's somewhat necessary in my mind to fund these programs and continue with this stuff. But no clawbacks as far as I'm aware.
Great, thank you. Well, let's move on to the new program that a lot of Saskatchewan small businesses have been interested in. There has been talk for a long time on the part of the provincial government that they were going to look to put something in place to help out the small businesses that had been affected through the public health orders that have been communicated. And so the language on this program, the Saskatchewan Small Business Emergency Payment Program, a wonderfully named program with an excellent acronym, is that this is intended to provide help for small businesses that, quote, have been ordered to temporarily close or significantly curtail operations during the public health emergency period due to a public health order. And obviously that description carries on somewhat, and you can view that on the Saskatchewan government's website. But the idea here is to help businesses that have been impacted as a result of an order to comply with one of these public health orders. So if your business is currently operating in a different way, my understanding based on my review of the qualifying criteria is that even if all your people are at home, but you're still able to operate and you are not directly subject to a government order to close down, that you would not be eligible for this benefit. Whereas other industries, we talked about estheticians, hair salons, gyms, etc., would be eligible to qualify. And I'll talk about that a little bit more in a moment. I'll share with you the language that's actually in place on the government website. The way this would work is it would be a grant that would be equal to 15% of your business's monthly sales, either in April of 2019, so a year past, or February of 2020. So it looks like they took a cue from the feds here on some of the issues that cropped up with how the wage subsidy was being qualified and gave you the option to decide how you were going to apply. Now, interestingly, the maximum benefit that's payable here is a $5,000 grant per business. But the way it works out is to access that full amount, your revenues in the qualifying month would have had to be at least $33,333.33 is sort of the way the math shakes out on that one. So to give you an idea of how much you'd likely see if your revenues were affected by that closure, if you hit that 333 or more, you're going to get that full 5,000, and anything beyond that is going to be prorated down based on your revenues. Now, interestingly, with this program, that differentiates it somewhat from the wage subsidy is that the payment that you receive, the grant you receive, can really be used for any purpose. So it isn't a lot of money, and that's probably the primary criticism that you could levy against it. I know, Mitch, last week when we talked about it had just been announced and not in any detail, that there's that idea of spreading the butter pretty thin and nobody gets a taste, I think is how you put it, which I thought was pretty apt. I know Craig really likes that saying and is trying to work it into his day-to-day life.
Well, I can't steal it too blatantly because Mitch and I run in some similar circles. So then if I'm stealing the swag, I think is what the kids say. But I'll try to not to do that.
Yeah, I wouldn't want to be mocked in the accountant circles.
I'm not mocking it. I love that phrase, Mitch. I'm a big fan.
So anyway, I mean, true to the point, it's not a lot of money. For a lot of businesses, if you're not hitting that revenue threshold, it's even going to be less money than the 5,000. But I think the silver lining to it is we are, for a lot of businesses, particularly those that have been forced to close entirely, we're in anything helps territory. And the fact that this money is unrestricted money and can be applied to a lot of the fixed costs that we hear these businesses are struggling with, like rent, op costs, that sort of thing, servicing debt, all that type of stuff, you can use that money to that purpose. Whereas the wage subsidy obviously just offsets your wages and doesn't do a whole hell of a lot for you when it comes to your fixed costs. So that's encouraging. It's a one-time payment. To qualify, the qualifying criteria is actually quite broad. So the biggest one is you were affected by a public health order. I'll talk about that as I promised in just a moment. You have to have fewer than 500 employees. You have to have a permanent establishment in Saskatchewan. And Craig, I'm going to ask you a question about what that means in just a moment. You have to have been active in business on February 29th, 2020. And importantly, you must have experienced a loss of revenue. It's not clear exactly how you'd have to demonstrate that, but the application process is now live. So if you think you qualify, you can apply for this today. And you must not have received any non-government relief payment to date. And what they're really getting at with that one is if your insurance did in fact pay on a business interruption or a loss of revenue type of policy, which we know people are having trouble accessing those types of provisions right now. If you have received a payment, that's going to disqualify you from this particular program. Craig, while I look up the details here that I wanted to share around eligible businesses, can you comment a little bit on what actually qualifies someone as having a permanent establishment in Saskatchewan? Does that require me to have a physical storefront or a physical presence?
No, it's not necessarily bricks and mortar. It's a combination of either bricks and mortar or boots on the ground. So you'd have to have employees that are living in the province that are providing the services, and your business operates here and generates revenue here. So it's one can look at it as if on your corporate tax return you're normally paying tax to the province of Saskatchewan, that's sort of giving you that permanent establishment criteria. So some businesses are sort of the owners are here in Saskatchewan, but they're really based out of Alberta, for example. When they're filing their returns, they're paying taxes to the Alberta province, not the province of Saskatchewan. So that's maybe a good test for you. But if you've got folks on the ground, bricks and mortar stuff here, then that's going to generally qualify you for this test.
Thanks, Craig. And I just wanted to share before we cap off this program and move on to a quick update on the Canada Emergency Business Account loans that a lot of people have had interest in, and we have some questions from the crowd on. I wanted to just clarify what's meant by businesses that were affected in terms of closing temporarily or curtailing their operations. And the government really has linked this quite explicitly to businesses that actually fall within the scope of the order. I'm just going to actually read their language to you here because I know some people are curious about this. Businesses that were ordered closed include bars, restaurants, recreational and entertainment facilities, and personal service facilities such as hairdresser, businesses that provide dental, optometry, ophthalmology, physical therapy, occupational therapy, podiatry, or chiropractor services that were ordered to provide emergency services only, and restrictions that had also been placed on childcare facilities. Retail services are also eligible if they're not considered a critical or allowable business services. So those lists are available through the public health order on the Saskatchewan.ca website. You might want to check that out directly because the language is quite important. But again, the key takeaway here is if you weren't within the scope of a specific public health order, it does not appear that you will qualify. Craig, anything to add to that program or any questions from the crowd before we move on to a quick update on the emergency loans?
I don't have anything in particular. It is interesting that it says to be eligible, a business must be a person, partnership, corporation, or nonprofit. And it doesn't seem to differentiate between an associated group. So if you've got a different corporation operating a restaurant in Regina than you do in Moose Jaw than Saskatoon, on the surface, it seems like you may qualify multiple times for this, but it just was basically released in more detail yesterday. So it's hard to know for sure. That's just a possibility that may be out there for those that are running multiple locations and multiple businesses, multiple corporate entities, I should say.
So you are on the same wavelength as Anna, one of our guests, who just actually asked the same question around whether or not multiple businesses operating under a common legal entity could access the benefit I share your view, Craig. If I'm Leo's group, let's say, and I own multiple bars, I would expect that I'd likely qualify for each location. But again, not clear right now. Would you suggest that folks apply for each location, or perhaps reach out to the business support line that the government has installed to get some clarity on that?
Yeah, in general, calling the province is pretty useful in terms of their information officers for PST and other sources. So I think that the business emergency line would be a great first step for this. The way that that's worded, I do assume that multiple business lines within one entity will not be getting each $5,000, but multiple entities may get multiple amounts.
So it could come down to your legal structure is what you're getting at.
That's right, yeah. And
right.
Which is a good and a bad thing, I guess, that just as against it coming out so fast, it's hard for them to nail down the exact details to sort of scope in every little situation that's out there.
Perhaps we'll add that to our list to try to provide some follow-up on when we meet next. Another question came in on the relief program, the Saskatchewan Business Relief Program that we're talking about right now, is whether or not rent relief that might have been secured through some negotiations or discussion with your landlord would qualify as a benefit that would preclude the $5,000. And I'll take a stab at that one and then welcome the panel to chime in. My understanding is that that is not a payment that has been received outside of a government program. So based on the language that's currently available, it would appear that you would not be disqualified because you'd secured other benefits. The same logic in my mind would apply to having received relief on your deferral on your water and sewer bill from the city of Regina. It's not a federal or provincial program. It's relief, but it should not disqualify you from accessing the up to $5,000 grant. Craig?
Yeah, I would concur with you, Jeff, there that it's rare that we're going to agree, I suppose, but it's your wording is correct. If you've received a payment, that's the concerning factor, and with no payment, shouldn't be problematic.
Great. Excellent questions coming in from the field, very helpful, so please keep those coming in. We're going to just provide one last brief update on a program before we get into our panel discussion and start fielding your general questions. And this one I thought was important to touch on just because, as Craig alluded to in his earlier comments, we're in the thick of this one. This one's out there, you can apply for it, and we're expecting to see money hitting bank accounts pretty quickly. And that's the Canada Emergency Business Account. So folks will recall that this is the $40,000 emergency loan that is fully guaranteed by the Canadian federal government, which as a business owner will be a great relief to folks that are in difficult situations right now. You're not asked to provide a personal guarantee on this particular lending vehicle. And if you're able to pay this back by December 31st of 2022 in its entirety, $10,000 of the $40,000 will be forgivable. It essentially will convert into a grant. So you would only have to repay $30,000 if you were able to do it by that deadline. And of course, if you were not able to meet that deadline, it essentially converts into a term loan with a 5% interest rate. The other nice features about this loan, and we won't revisit them all in enormous detail, if you consult the presentation from last week, which is available online at the resilienceseries.com website, you'll note that the nice thing about this loan is that you don't have to make principal payments or any interest payments because it's a zero interest loan for that initial period of time before December 31st, 2022. So it's a really attractive vehicle because it's essentially free cash now that you only have to repay 75% of if you can pay it back by that December 31st, 2022 deadline. The nice thing about this is it's being delivered through the banking system. If you want to apply for it, the guidance is that you must apply through the institution that you normally use to do all your banking. So if you normally bank with Royal Bank, and that's where your operating account is, the expectation is that your application would come in through the Royal Bank. So this is not the time to be shopping around or trying to apply through other institutions. They won't be able to help you out. The application process is active. We've had a number of the clients we deal with that have gone through it. I've had the same reports back that Craig has, which is that it's been a really simple process, very easy. The terms are quite straightforward. The only thing that people need to submit to do this is your T4 summary from the previous year. You don't actually need to submit that document physically. The government can demand it of you should they choose, but you basically need to be able to report your T4 total salary for the previous year as a mechanism to validate that $50,000 to $1 million salary to qualify, or just the $50,000 rather. So that's encouraging. that money should be hitting accounts as early as this week. We have not yet heard any first-hand accounts of deposits being made. Craig, I don't know if any of your clients have indicated they've seen cash yet.
No, I think it was a 5 business day process from Thursday, which would maybe put it to tomorrow at the earliest, maybe Thursday.
So, I mean, it's exciting because the 10% wage subsidy, which has been pretty nominal, is going to help some small businesses. That's the first cash people have been able to get their hands on. It's obviously not cash, it's cash you don't have to remit. This will be the first real relief coming from the feds. It is a loan, but it's got some very attractive features. And earlier there was a question, and I think we addressed it, that to me the key takeaway on this particular program has been that between this and that emergency response benefit or emergency relief benefit program, it seems to really demonstrate that there's a real desire on the part of the federal government to make this easy, to keep it streamlined, to make the application process pretty seamless, and to get people through as fast as they can. So everything we've seen so far has pointed in the direction that these things are going to be well implemented and well coordinated. And I think it's very encouraging from the federal government standpoint that when you compare it to the anecdotal stories coming out of the United States with some of their relief programs, which from an implementation standpoint seem to have been fraught with difficulty and people are having a lot of trouble applying, we seem to be having a much better experience here on the north side of the border. So that's encouraging. Craig, I don't know if you wanted to add anything to that.
No, the CERB program, people were hoping that it might be expanded to include dividends and not just wages. We haven't heard any rumblings of that. They were too busy trying to pass the 75% wage subsidy thing. And there isn't, you have to attest that you're using this for operations, you can't use it, oh, I qualify, I'm going to take the money out and play the stock market now or pay off a debt. You can only use it to make regular, normal payments you have to make. So it is something to watch. To your point, Jeff, they're trying to make these things easy to apply for, but they're trying to give that penalty at the back end, the big stick, so that you know not to screw around when you're doing the application. So I think that's a reasonable approach to take from the government. And they'll do a sample testing as we come through this. They'll be requesting some support from people on a random basis to most likely is what I would expect. That's what they do with most other programs.
Yeah, we've been encouraging some of our clients just on a proactive basis to, fire up a spreadsheet or a notepad and try to sort of keep track of how you're using this money so that you can sort of explain how it's been used for the right reasons and that you've kept anything that, if you're an owner that doesn't draw a salary and still needs to pay yourself through dividends, et cetera, just trying to make that separation a little bit more explicit. So if you do get checked with one of those spot checks, just like a GST, post-assessment audit or something like that, that you're well equipped with the information that they're going to want and it can all just be resolved quickly. A couple last questions on relief programs that we've seen from the group here before we move on to our panel discussion, which I'm very excited to get to, and I know many others are as well. Is Craig, there's a question directed at you, and I'm curious for your take and the rest of the panels. Do we feel that the guidelines around these programs have been well communicated by the various governments to avoid misunderstandings and potential costs or penalties down the line? And I know you and I have talked about this offline, and there's always a bit of a risk when governments come out and announce a program that gives people hope and some potential punishment down the line if it's abused without a lot of the detail in between to help people make good decisions. That causes a lot of heartburn. I suppose looking for your opinion then on how this has been rolled out.
I'm going to give the government a passing grade, and that's not normally when you're an accountant and you're dealing with tax returns, you're always supposed to hate the government because they're the ones taking our money all the time. But I'm going to give them a passing grade so far. The biggest issue has been people have a misconception about when the programs are live and available. It's a common thing where clients, like I had clients trying to apply for the wage subsidy on Friday, and they're frustrated because what's the deal? They've done press releases in advance of having the programs available. The CERB, the CEBA or whatever, the business loan account, that was another thing that was announced, and then applications couldn't happen for a while. So that's the only thing I'd really take issue with is the announcements come and then the program's not really ready to be live. So there's a lack of clarity around when the programs will be available. But I got to give them credit. If we contrast them to other governments, they've been doing more. And I would give the opposition credit as well in terms of making sure that things are done in a way that's sort of sensible and consistent with their democratic approach. And overall, it's better than one maybe would have hoped based on my cynical view of government, which again is limited just to me and my opinion, not to reality.
We had a really clear disclaimer at the beginning of the presentation, Craig, that should keep you safe on that one. I'd invite comments from the other panelists, but I tend to share Craig's view. I think the government here has stepped up in a really positive way, and the the agencies that, maybe there would have been some reason to think that this was going to be a difficult and complicated process have really stepped up and done, I think, a pretty good job. The big concern being that the timeline between announcements and dollars in the accounts is still a little bit murky and longer than we'd like it to be, but such is life, I suppose. Mitch, did you want to add to that, or Pam or Cary?
Oh, I have many comments about our interactions with the federal government. I think that although they seem to be making the right clucking noises now, my big hope is that this crisis will finally make them appreciate small business in Canada and the amount of people that we do employ. I think that this current administration has made it more than abundant that they don't trust small business. Both Trudeau and Morneau, spelt two words, if you don't mind right now, have made it abundantly clear when they announced programs, and both of them threatened 3 times. They said, we don't have any details, but do not game the system. And also, this is the same government that gave CRA an extra was it $500 million, Craig, over a period of 3 years?
Yeah, it was,
tax cheats.
They were beefing up the team there with 500 million, you're right, yeah.
Exactly. So I think that that's their default mechanism. I don't want to give them as much credit as I can right now, but it ain't over yet.
Yeah, I mean, to that point, there's an interesting insight there, and it's one we've kind of observed, that this is probably the first crisis, certainly in my career, where it was less of a too big to fail and more of a too small to fail sort of public optic. I think you're bang on. I think for the first time in a long time, it's becoming a lot clearer to the public how important and how fundamental to the economy small business is. And it really seems to have taken not being able to go get your haircut or not being able to go sit down at your local pub for people to really clue in that a great majority of our economy is founded on the efforts of small business owners. So I concur. It'll be interesting to see if this maybe flips the script a little bit and changes the attitude going forward. One can hope, I suppose. Pam or Cary, anything to add? No, the lawyer wants to sit this one out, and the bankruptcy trustee. I suppose that tracks. One last question on programs is, have there been any conversations at the federal level, which I'll be the first to admit they don't root me into those conversations, but we can speculate, I suppose, to reduce the eligibility around the $50,000 payroll lower bound for the previous year to qualify for the $40,000 interest-free loan, the Canada Emergency Business Account? My understanding is that there has not been. That payroll requirement has been pretty hard and fast since the early days of the program. I don't see it getting relaxed. Craig, any insight on your part?
Yeah, there's been no scuttlebutt about that, unfortunately. It's the initial sort of rumors around it were that they might expand it to include dividends and wages, not just wages, but that's been really stagnant with all the stuff trying to just get the emergency session together to get the 75% subsidy done. So, I mean, every other program, or rather the CERB program is a good example of them expanding it each sort of each week and to make it a little bit better. So the hope would be that maybe they do, but it's just hope at this point. It's not a plan. So I would just not count any chickens on that front just yet.
Yeah, to that point, hope is certainly not a strategy. So probably best to be thinking about some sort of alternative options. Mitch, you look like you wanted to.
Well, and I think fundamentally the government has always had an issue with small business and dividends. It dovetails into my last rant about also being able to save money in a holdco or in your corporations for occurrences just like this, which the federal government seemed to not think was necessary just one short year ago.
Mitch, I'm the one that's supposed to be railing against the Liberal government and all their tax policies, but thank you for taking the lead on that. That's great.
You bet. It'll be interesting. I think we should have a follow-up in about 6 months, and out of the panelists, we'll see who's getting audited and who isn't.
I have to be diplomatic. I have to deal with CRA on a regular basis, so I need to be very, very careful what I say. You can do whatever you want, Mitch. You're a big deal.
I'm pleased to report that I'm not seeing a lot of at cra.grc.ca email addresses in the sign-up list. So both of you gentlemen should probably be all right, at least for now. With that, we're going to end our discussion of the programs, which I think was actually extremely helpful today. And I really appreciate Craig and Mitch, your contributions to the discussion, because I know a lot of the questions that came up that we were able to answer. There's probably some of the real gaps out there in terms of how this has been implemented, a lot of these little details and persnickety things that folks are really struggling with. So hopefully folks out there have gotten some additional clarity today. And if you have other questions, please put them into the QA and we'll try to maybe loop back to them at the end of the session if there's time. Now that said, we're moving on to the panel discussion. And as soon as we got into the program discussion, I immediately regretted not introducing our panelists formally at the beginning of the session, but I suppose we learn something each time we do this. I'm going to do that now. But before that, I'd just like to explain how this format works. So for folks that joined us last day, essentially we're going to have a moderated panel discussion. I'm going to moderate the discussion, try to field questions or direct questions to our various experts. I have a raft of questions that I've prepared based on the things we've been hearing this week from businesses and the feedback that came out of last day's session. But this is really intended to be a forum for the folks that have joined us today. We have 45 people with us at the moment, to ask specific questions about your unique circumstances or things you're grappling with in light of COVID-19, so that we can get you some expert perspective that might be either costly or difficult for you to access ordinarily. So I know, just speaking out loud, Craig, who I enjoy working with, full disclosure, Craig is my accountant for my business, and normally to get this level of advice, he would send me a bill. I presume he's not doing that in this scenario, given the volunteer nature of the exercise.
We should have clarified that. I've been on the clock the whole time, Jeff.
Yes, well, I'm sure our office manager will promptly remit payment. And then, other individuals, Cary, lawyer in town, Pam, normally you'd have to be in dire straits to get some insight from her, which is great to have her today. And then, certainly Mitch. I mean, Mitch is one of our largest and most successful commercial property owners in town. So the opportunity to ask questions about, how you might want to approach your landlord if you're looking for some rent relief or what options might be available to you. I mean, these are unique and important opportunities. So please send your questions in, and don't be afraid to be really quite specific about your own circumstances. The only thing I ask is, if you're using that QA form to submit them, try to give us a little bit of detail about your situation so that I can pass that along to our panelists and they can give you good answers. And as they're talking, you have a follow-up, feel free to type it in and I'll try to keep on top of it from a moderator standpoint. So I'm going to quickly introduce everybody here, and then we're going to spend the next 45 minutes or so working through some of these questions, and then we'll adjourn for the day, or when we run out of questions, whichever comes first. So looking forward to hearing from the group. I'll start with someone that really probably at this point needs no introduction, because he's been pretty active in the conversation, and that's Mitch Molnar, the president of Mitchell Developments here in town. Mitch is a very successful commercial property owner in town with a pretty diverse portfolio of holdings. He's saying he's not successful, but the rest of us are all quite envious of Mitch's success.
I was successful.
Well, I mean, at least you know what it felt like. Some of us are still working on it. Downtown office space, retail, warehouse properties in his portfolio. Mitch, one thing I've always appreciated about Mitch, and I'm sure people in the audience are appreciating it right now, always been a pretty straight shooter that gives you the facts and sort of says how he sees it, which is refreshing and a bit rare these days. So really pleased to have Mitch with us today. So welcome, Mitch.
Thanks a lot, Jeffrey. Great to be here. I'm more than happy to share insights from myself, and I've been on a number of calls with other landlords in the industry as well. So hopefully I've got a pretty well-rounded take on the industry.
Excellent, thank you. We're also joined by Craig, who has been providing us excellent insight and detail and sort of poorly structured jokes throughout the morning. Craig's a partner at Vertus Group and has a broad practice on the commercial side. He's worked a lot with restaurants, professionals, the construction industry. So some of those harder hit industries. So if you're in one of those harder hit industries, Craig's likely to have some insight and some perspective that might be quite valuable to you. So Craig, thank you for your insights already today, and thank you for joining us for the panel.
Yeah, no, it's my pleasure. I didn't appreciate the poorly structured humor joke. I know it's not my best stuff today, but I mean, it's a crisis here, Jeff. I'm just trying. I'm trying to get.
we're all doing our best. At least you have the gray beard going for you, so we've got that. We're also joined by Cary Wessel, who is an associate at Gerrand, Rath Johnson, lawyer in town. Cary works on corporate matters, real estate finance, securities, private equities, mergers and acquisitions. and brings to us today his experience both in private practice as a lawyer and operating in industry as a lawyer in the construction industry. So, Cary, thanks for joining us again, and welcome.
Thanks. Happy to be here.
All right. And rounding out our panel is Pamela Meager, who I once had the pleasure of working with back in my MMP days. She's a senior vice president with MMP's debt and insolvency practice, who I think is here really to help provide some comfort and some insight to folks that are a little bit worried about, where this might play out if they find themselves on the difficult side of some of these circumstances we're facing. So, Pam, thanks for being with us today, and appreciate you joining us.
Yeah, thank you so much for inviting me and sharing all the wisdom that you have with your other panelists.
Well, they are the ones with the wisdom. I wanted to clarify that. And then myself, I'm Jeff Boutilier, as I mentioned earlier. I'm going to do my best to moderate and contribute from a management perspective. We help a lot of small business and medium-sized business owners essentially take all these different pieces of expertise and information and weave them into an approach that you can actually go execute to try to bring all the moving parts together and get to the other side of this thing. So that's what I aim to do today. All right, so I'm just going to quickly stop our screen share so that we get back to a full view of our beautiful assembled panelists. People at home, if you use the shift print screen function on your computer, you'll be able to take a snapshot of this good looking crew that you can refer to later. Maybe set it as your desktop background, something to think about. And yeah, Mitch is like, yeah, absolutely, you should do that. And now we're going to get into some questions. So again, the QA function is where I would like to see your questions from the crowd. I'm going to start off with one for Craig, because I don't think he's spoken enough yet today. And that's just one that we've been hearing a little bit, is there's businesses out there saying, great, all these relief measures are coming, the wage subsidy, this provincial thing, et cetera, et cetera. What do these look like from a taxability standpoint at the end of the year? Am I going to be paying corporate income tax on all of these programs? Are these taxable revenue streams? How does that all play out?
In general, any support from the federal government is going to be taxable. So the 10% subsidy, the 75% subsidy, those are both going to be taxable. And on the small business loan of $40,000, that $10,000 grant would be also taxable. The province is asking for their $5,000 amount to not be taxable, but I don't think they have confirmation yet that grant would be tax-free from the feds. Certainly, they'll only have power to put that as tax-free within Saskatchewan for the Saskatchewan tax. But the hope is that it is tax-free. Certainly, like most every other subsidy the government gives, it's here's the subsidy. Oh, but by the way, it's taxable, and so but timing-wise, it's actually good to get the money now and pay the tax later in some ways.
Absolutely, thank you. Mitch, we just had a question come in, a pretty detailed question, and it sounds like it's from someone that's maybe in a bit of a difficult circumstance in light of the current shutdown. So I'm going to read it in its entirety, and I'm wondering if you could take a first crack at it before we open it up to the panel. So the question is, I qualify only for the CERB benefit, and 100% of that money has to go to my commercial lease payment. I'm lucky to have a spouse who's an essential worker in the energy sector and who is otherwise supporting me financially completely. I'm structured as a corporation and took only $33,000 in dividends in 2019. I am not on my own payroll. As such, I do not qualify for the $40,000 loan from the federal government. My debt load is too high to qualify for additional funding from my bank or BDC, which is a very difficult situation and sadly not entirely uncommon right now. If my partner's employer lays him off, our financial resources will be completely tapped. How do I approach my landlord in a non-confrontational way and ask for a lease abatement or a reduction? So a very difficult circumstance, and looking for some advice on how to maybe go to the landlord and see if some of these monies could be freed up to survive.
Well, speaking from personal, it's interesting. I think that any tenant that has approached me, we're just happy to have the conversations. I don't, hopefully your landlord is accessible. I know that some of the bigger fellows may not be fielding, if they've got, millions of square feet spread across Canada, perhaps they're not being as receptive and, applying some sort of corporate line that they're not addressing anything until all the programs are released or those sorts of conversations. But, assuming that you've got somebody to talk to, I mean, just be very frank. I mean, landlords don't want to lose tenants because the aftermath of this, hopefully that's not too harsh a word, but we're going to have a period of prolonged recovery. And I think that all landlords are looking to maintain their relationships with their tenants as best they can. I mean, there's always the option. Don't do this. Talk to the landlord. I've got a few tenants that I haven't talked to yet. And I hate the first conversation is going to be, so I see we haven't gotten your rent. What's the deal? I mean, it's better if you initiate that. And also one fellow sent me a bolded, which I actually think is, I know this isn't a funny situation for you, but I don't do this. All capitals, all bolded, urgent COVID-19 emergency. I'm not paying my rent. And I thought, okay, I get it. I didn't know there was an emergency. That's interesting. But if he would have, just picked up the phone and we had a conversation, and I think that would have been a lot better. I know that lots of landlords don't understand people's businesses. They just understand that they lease space and maybe they sell widgets or, do whatever they do out of there, but they don't really understand the fundamentals of how you actually get paid, whether you've been, mandated to be shut down. And I just think that the landlords have abilities to, I'm not saying that all of us are generous, but we certainly have things that we can do in our own portfolios and are managing our own small businesses that would allay some costs that could be passed on to you. Some guys aren't paying utilities, some guys aren't paying operating costs, property taxes, and those things are going to come home to roost probably in the next 3 or 4 months without the municipal or provincial governments having any further programs in place. But the national banks, as well as the credit unions, have been very understanding with landlords as far as putting off payments. And I don't know why that wouldn't trickle down to each and everyone's tenants, if that tenant really has an ability not to pay. And I just think, have a frank conversation. I don't know which of my cold, heartless bastard landlord compatriots wouldn't accept your story and try to work with you. Well, I do know one, but I won't mention him.
We'll put a poll question up and see if people can guess who it is. One follow-up to that, Mitch. What are you looking for as the landlord when a business is coming to you and saying, hey, look, a deferral, I've got a plan to get through this. Can you work with me? Are you looking for them to come to you with some sense of how they're going to get through this and how they're going to make it up on the back end? And just a follow-up or a related question, if there are deferrals of op costs or property taxes, et cetera, presumably people aren't going to be in a position to just pay them lump sum when this thing is over. And that's going to need to be phased in. Just any insight or perspective on how you're managing those sorts of situations?
For sure. I think that the landlord is able to tell by the sophistication of the tenant. Do they have multiple locations? Are they national? And a lot of those national tenants, when they contact us, they have a plan in place, or they have an idea of a plan in place. And most of them are very cognizant of what their responsibilities are under the lease agreement. And that there's obligations from either party. And generally they're asking for, the big fellows are asking for a rental deferral on net rent, which is the portion of the rent that the landlord would use to pay for their capital costs, to pay for the cost of the property and get a return on their investment, as opposed to the operating costs such as utilities and maintenance and property taxes, those sorts of things. So most of the big guys are asking for a deferment of that net rent, and then they will pay it back on an amortized basis over the remaining term of the lease, which hopefully is a long enough period that it's not a shock to those rental payments when they do start. Now, that being said, if you're a small tenant that has been mandated because you have a retail or a service industry, restaurant, nail salon, those sorts of things that you have to close, or a gym or recreational facilities, those sorts of things, I think that if you go to your landlord and ask for a gross rental deferment during these periods of time, and then try to have some sort of a repayment program, depending on the size of your business, and you know, the square footage you occupy on a property versus, you know, if you're 100% of the property, that's going to be more difficult for the landlord to do. But if you represent, you know, 2,000 feet out of a 100,000 foot property, and all the other tenants are, you know, government leases or SOBs or those sorts of people, I think that there might be more latitude. But I would think that if you are even presenting some sort of position that you would like to reciprocate any good deeds done for you by the landlord, i.e. extending your term. You may only have a year or two left on your term. If you could say, if you can give me some relief, I'm more than happy to, you know, make a commitment back to you. And I think a lot of landlords in this environment would think that is a reasonable position to make. So depending on the size and scope of your lease, I know that I've got out of 100 tenants, I probably have 4 that I know that there's no way that they're going to be able to repay any rental abatements that I give them in the near term. And you have to be, you know, as a landlord, your choices are to see that tenant go out of business and have the cost of re-tenanting that space, you know, with leasing commissions, probably improvements that you need to pay for, cleanup of the space, more rent-free that you usually would offer a new tenant. So I think that most landlords will be more than happy to deal with you. And I think that most of them appreciate that without landlord helping small tenants, that we will probably lose them out of our portfolios. So I think you can have some confidence talking to your landlord that they're prepared to do something for you.
Thanks, Mitch. And I suppose a question that builds on those folks that perhaps find themselves with landlords that aren't quite as supportive. And Pam, this one's for you, so you might need to unmute your mic for me. You know, as this stretches on, we're seeing a lot more concern from business owners about, you know, the risk of insolvency or perhaps not being able to make it through. And I'm curious if you're seeing that manifest itself in your practice, and if you are, what are some of the questions that you're getting from business owners or small business owners right now, and what's sort of the first point of advice you'd give to someone who thinks they might be at risk of defaulting or not being able to make it through or make their obligations?
A lot of the time, what we consider when we talk to people, kind of what Mitch has said, is you really need to talk to your creditors. Before your rent is due, before your major payments come due, is really come up with a plan. Like, I can't do this month, and have how you're going to repay it, a plan to repay it. And if it's something like, we don't really know how long COVID's going to last, so I can't tell you I'm going to pay it in 3 months, but why don't we communicate every 6 weeks? I can give you an update as to where we are, what I'm seeing, what's deviated from what I thought was going to happen, and just keep that communication line open. The avoid, or maybe the bold emails to your landlord probably isn't going to open up those conversation lines. So really speaking with lenders, landlords, anybody who you feel you may have money owing to in the near future. Cash is king right now, of course. Managing those cash flows is really, really important. And that's what I've really focused on people to get back to, because what I'm seeing right now is a little bit of panic, which I think is very normal. No one's experienced anything like this before, and there's really no, like you said in the beginning, no real end in sight just yet. Good news has come the last couple of days as we're getting better in Saskatchewan, but there's still that panic of, even if it gets back, what does it look like? So I told them, let's sit down, look at your cash flow projections, speaking with your accountant, making sure you're taking advantage of all the programs, really helping them understand directors' liabilities, Canada Revenue Agency, Section 160 assessments, looking at all these potential things coming up and trying to help them mitigate those the best that we can. Looking at personal guarantees, we see a lot of personal guarantees and cross guarantees from other companies you may have. So knowing the risks of if this happens, if that happens, it doesn't necessarily alleviate the stress that they're under, but at least they kind of know, okay, if these things start to happen, I really need to start doing these steps. So just becoming a lot more prepared, which is great, getting information before everything goes sideways is a lot easier. And hopefully we can find a way to restructure more informally by working with the landlords, working with them, because ultimately meeting with me on a more formal basis is the last thing we want to do. So if I can see any other way to help these companies just have a bit of a break and help conversations happen, we are obviously going to get them in the right direction, and engaging counsel along the way and accountants to make sure that we have the right people at the table and having conversations, because some people just don't know how to have those conversations in the beginning.
To that point, Pam, are you seeing a relaxation or a difference in the attitude of some of these creditors that you're approaching or dealing with now? I mean, presumably, not unlike Mitch's industry, the credit industry doesn't want a larger than ordinary amount of folks defaulting on loans, et cetera, and going through undertakings. Are you observing that yet, or is that still some time to come, do you think?
Basically, what I've seen so far is just a complete halt on collections. So even with the CRA, they've actually relaxed on collecting, which if they had stuff in place before, so they maybe had a garnishee on your accounts prior to COVID, they're a little more reluctant to come off, but more recent requirements to pay have actually been lifted by the Canada Revenue Agency. So definitely that was a plus first, allowing a small business to continue to operate if they had their bank account. Makes it a lot easier. So that was a really nice positive for them. But they haven't let off older collection stuff. So that's a little hard to see still. But as far as lenders, banks and stuff like that, they basically just let off the gas right now. And they're trying to figure out, okay, do we actually do these? Any of the stuff where we saw notice of intentions to enforce security, so realizing on the secured creditors, if they were sending those notice prior, they still seem to be like going to repossess the vehicle because that action had been started 6 months ago or a year ago. So we're still seeing those kind of things play their way out, but I haven't seen any new initiations since this has started. So I think they're still trying to figure out if that makes sense at this point to resume collections.
Yeah, so that's encouraging news that there's maybe a bit of a breath being taken before new things are being started and giving people some room. And there was a question from the crowd actually sort of on that same vein, which was, given that we're in this historic time from a financial perspective, do you foresee, or are there any in the works, specialized insolvency programs or things being developed to maybe ease recovery for individuals or businesses over the next couple of years that would be different than the normal insolvency or bankruptcy processes that are currently in place in Canada? Are any of those discussions happening, or do you expect that they might?
There's been conversations around making it a little more accessible for people. So obviously no contact. It's federally regulated, so it's I can't see that happening just yet. There's really no word of a easier way or a less impact to people's credit going forward discussion as of yet. I think if it goes on for a longer period of time, you might start to see something like that. But as it sits right now, they're really sticking to the basics of what the Bankruptcy Act gives. But I'm hoping that they've made it a little more accessible, a little more easy for people to get information, a lot easier for trustees to get to people. Obviously, we can't do face-to-face stuff any longer, so it's a little more accessible. So I'm not sure if that makes sense, but I think my advice really to most people, because it's a bit of a knee jerk right now. Everyone just kind of panicked because their whole world is just kind of crumbled a little bit. No work for husband, wife. So I've just said, okay, talk to those lenders. They're really making some concessions to make it so you can be able to carry on and avoid me. So until you have that opportunity to speak with your lender, don't rush to me, because that may not be the best answer ultimately in the long run.
I'd just like to clarify that, having known some of the clients that Pam has helped over the years, that they're not always super delighted to meet her at the outset of the process, but by the end of it, they're usually quite grateful. Cary, quick question for you. Whether it's the insolvency process or whether it's people challenging lease agreements, et cetera, a lot of folks right now are still undergoing various legal processes as, part of their normal business operations, or were involved perhaps in some sort of proceeding or undertaking before this all hit, we know that just like everybody else, the legal systems operations are being curtailed fairly significantly. What does this mean for businesses that are in the midst of a legal process right now, that the courts have kind of changed how they're operating? How are things playing out?
Well, I think a good place to start is that a global view of what the government is doing is offering a subsidy to continue cash flow. They're not canceling private debt in any way. We've seen this in other governments where they've legislated changes to specific private loans and that type of thing. We haven't seen that here yet. So generally speaking, your private debt still exists. The courts are hobbled. The magic date currently seems to be May 31, and provincial court dates, which would handle small claims, anything under $30,000 for lawsuits, and criminal matters is pushed back into June. If you're a criminal defendant and you're already in custody, bail hearings continue because that's very, very important. Obviously, the freedom of people being restrained is a very big deal. So bail hearings continue, but normal docket court is simply pushed back to June. So if you're charged with anything and you're not in custody, those things are pushed back. Small claims court is simply pushed back to June. We don't really have any information on what will happen at that point in time. I think that everyone that has court dates will simply be rescheduled sometime after that. For Queen's Bench, just a few days ago, we did get Queen's Bench handles everything from family or civil claims over $30,000. They've just last week issued a judgment that lets you know what is emergency and will continue on, and what is non-essential will not continue on. And the case that actually came out was for overholding on custody of a child that's supposed to be shared. Can you have hearings about something as serious as a drug-affected parent continuing on? And the court said that was actually not important enough, and it was not life, limb security of the person, therefore those things aren't to be heard. Wow. So generally speaking, unless it's an emergency or someone's freedom is involved or someone's safety, the courts are essentially hearing nothing right now. But the registrar's office is open in Queen's Bench, which means you can actually be sued, be served, and have judgment rendered against you. So if you ever get served with papers suing you for anything, you do need to respond.
Scary. So, a lot to unpack there, but obviously some of the civil matters are continuing to proceed, but generally speaking, it sounds as though most things have been pushed back. Certainly sounds like it was great that Craig was able to get bail before this whole thing hit, because that sounds like it's stopped. He's on mute, so he can't fight back. There's a follow-up question for you, Cary, that I think is actually an interesting one. And, Mitch, I know you'll probably have a perspective on this, and maybe others. Cary, what's your view right now of some of these class action lawsuits we're seeing emerging around insured denials of business interruption claims by some of these businesses that have been hit by the order? Maybe more of an opinion question than anything, but an interesting one.
Yeah, so we'll have to see how that plays out. I think insurance companies are extremely sophisticated entities. They have very thorough agreements and policies. Essentially, every single risk that an insurance company faces, they are aware of them, and they have studied them, and they have put them into their policies in some way. So I'm not sure where any of that will go, and I would assume that we'd have to see something litigated to the end to see what will happen. And unfortunately, if you're a non-operating business, you can't afford litigation right now. I think that's the way you're going. Generally, I think you'd have to see how that plays out in the courts. I would not have an answer for that.
Yeah, for clarity, I didn't expect that you'd know how it would play out, but it's a fascinating thing, and I'm sure a sign of things to come. I suspect the litigation coming as a result of COVID-19 is going to be ultimately quite fascinating. A question for you, Craig. For businesses right now, and the panel will probably have a perspective on this. For businesses right now that are struggling with the idea that there's really no clear end in sight, and certainly the rhetoric at a provincial level this week has taken a decidedly hopeful note. I think in Saskatchewan, it's fair to say we're doing a pretty good job as a community. The Premier has said some fairly optimistic things in terms of starting to talk about releasing a plan for some return to normal operations. Obviously, though, from a North American and a global perspective, it's unlikely things are going to get back to normal as fast as people might like. Given that people are all sort of trying to forecast the end, and it's pretty unclear, and for a lot of our affected businesses, it's unclear how long they're going to be hurt for, even if they are allowed to take the locks off the doors. What can some businesses do who have realized or are beginning to realize that they're not going to be able to access enough cash to make it to the recovery, let's say by even a month's worth of cash flow, but they're quite confident that if they could plug that hole, they would be able to make it. They'd be able to get there. They just have that, it's a bridge too far, so to speak. What would you suggest for a client that came to you and said, look, I'm not going to make it. I'm applying for all these programs, but I'm going to run out of cash for a month. I've got a good plan to get back on my feet. What options are there? Is this a great time to maybe think about taking on a critical employee as an equity partner if they're sitting on some savings? Is this a good time to be, opening up to partnerships or mergers and acquisitions? Like what's out there for folks?
Yeah, the difficult situation is anytime you're negotiating a time like this for a new owner to come into your business, whether it be a key employee or a competitor or like someone that you could do a merger up or things of that nature, you're not really negotiating from the strongest point, and so you may not be getting the best deal that you'd have on offer. Key employees generally are employees because they don't have the capital to necessarily get involved in the business. So generally, it's going to be someone that is more of a senior employee that would be on the table for that. And it's just, there's no really good answer for that. Like, obviously the first step I think is to defer any payments you can defer through actual negotiations, as Mitch pointed out earlier, not just emails that say, I'm not, you're not going to declare bankruptcy like Michael Scott did on The Office. If anyone, anyway, it's fine. But so unsecured creditors cannot enforce payment on you. So for example, our accounting firm, if we send you a bill, Jeff, which we'll talk after the call about that amount. Obviously, just kidding.
We're gonna be looking for deferral, Craig.
Yeah, that's understood. But anyone that owes me money right now, I'm an unsecured creditor, and I know Pam would be able to comment on this, but I can't make them pay me. There's no really way that they can enforce that. I have no power to do that. Mitch, as a landlord, he can put locks on the doors and say, okay, that's it. I'm calling the sheriff or whatever the heck it is in that process. And Mitch might be able to concept, but so generally your first step, if you can't make these payments, is to negotiate with your unsecured creditors and say, look, I cannot afford to pay you. I have this plan in place. I will do it that way. And then, as Pam pointed out earlier, anything with regards to the government is generally going to be something you need to pay. In particular, payroll liabilities are something that you need to pay as an owner, especially if you're a director of a corporation, because you're personally liable for those sorts of things. So things of that nature would be in place. In general, there are loan opportunities available from, say, BDC. We talked at the outset of the call about how they're so backlogged right now, but they're able to issue credit on a relatively more lenient terms than normal, and to give say up to $100,000. And there's always deferral payments available for leases and for loans that are out there. So by hook or by crook, if you can get to the other side, that's really the bottom line. But I wouldn't hold out a lot of hope that key employees are going to have an opportunity to invest in the business, because most key employees don't have a lot of financial wherewithal or liquidity anyway to be able to buy in. And certainly if there's a competitor of yours that could be a good fit, that would be an option, but sometimes we're not always on good terms with our competitors, and a negotiating position right now maybe a little bit tough. Certainly there's always venture capital as an option. If your business is large enough, like someone like Prairie Financial Management might be by just something that could be an opportunity there for them. But generally they're going to be investing in businesses that have strong cash flow and good prospects. And if your business was that strong before, it's unlikely to be hitting the skids that bad right now. So I raise it as an option. I don't know how realistic it is. I think it's just batten the hatches and see if you can weather the storm for those that are in that boat, unfortunately.
Mitch,
Yeah,
Cary, Pam, anything to add? Sorry, go ahead, Mitch.
I was going to say, just as a follow-up to that, I certainly would think that, as a landlord is typically a businesses one of their largest cost factors next to employees. Most businesses have been able to deal with employee issues through government programs. They might be slow coming, but they'll be there. Your next take is your landlord, and I think that I do not know of one landlord who has even contemplated changing locks on a tenant. And I think that fundamentally, and Pam, I don't mean to tread on your expertise, but right down from bank CEOs all the way down to your loan officers, they're all making the right comments about nobody wants your house, nobody wants your car. And if they did, they're probably, to follow up on Cary's comments, they're probably incapable of accessing the avenues and pulling the levers in order to get those things from you. So I think that deep breaths, meditation, I hear meditation apps are really are a big thing these days, but you really need to sort of sit down, triage your life. And I think if you can afford to buy groceries and those sorts of things for the next 60, 90 days, that people will work with you. It's a trickle down effect. We've all got, nobody's unique. And I think that, everybody's saying, oh, well, he's a big bad landlord. Well, that big bad landlord also has, personal stories that make him not be so big and bad. So I think have some faith in your fellow man, except for CRA, just to be clear.
So, it's interesting. We've been really focused, I think, appropriately on some of the let's survive, let's get through the crisis side of this whole thing. But there is some opportunity, I think, for businesses in the context of what we're going through. And certainly, we've heard from businesses that are still pretty bullish on growing or expanding. They might have put those plans on pause, but they were well positioned or they're thinking about expanding. And I'm curious, Mitch, from your standpoint, if we're a business that's looking to expand and we were thinking about growing, could this in fact be a good time to approach a landlord and be negotiating on new space? Like, are there any deals out there to be had, or are people looking for value in the market already, or is that not quite caught up yet?
Well, the marketplace was relatively beat up over the last 18 months as it was. I was getting quite frustrated being focused in the Saskatchewan economy with all the job numbers that were coming out federally and saying how well we're doing. That certainly wasn't what we were experiencing on the ground. We all of our renewals were difficult renewals. Lots of tenants were already contracting. So I think that the marketplace is already soft, and I think that if you have a business that is prepared to enter into any kind of term, 3 to 5 years and need extra space, I think that a landlord these days would be rushing and welcoming you with open arms. And if they're not, find a different landlord.
We'll get you to hold up a piece of paper with your contact number on it at the end of the session. Pam, I have a similar question for you, but maybe on a little bit darker note. Given that creditors are in these unprecedented times and difficult situation out there, if you were a business owner that was perhaps on the bubble or pretty marginal before COVID-19 hit, and now we're in the midst of this crisis, could this be in fact a better or a good opportunity to start to undertake an insolvency process compared to 6 months ago?
I think sometimes with that, I would agree with Mitch's comment. My practice has been busier over the last 2 years than it had ever been in the last 15. So our economy wasn't doing super strong things before, but now everyone that was sort of on that bubble, kind of making it through, I think this might have just been the pop on that bubble, to be honest. So I think business owners, if they were close to that bubble or near that bubble, do need to talk to people sooner than later, because we do want to obviously communicate with the landlord ahead of time, look at the Canada Revenue Agency. That's usually where our biggest hangups with other creditors is Canada Revenue Agency, especially for payroll, will rank ahead of pretty much everything, and they will take everything. So we have to really try to mitigate that so that we are able to provide landlords, other creditors, other lenders something that left of the company. So, and look at the personal guarantees and personal liabilities. That's typically where people don't realize how much falls back to just Jeff, if Jeff was to come talk to me. And I think that's actually where people get scared the most, is like, okay, not only am I losing my business, but now I have to look at my personal stuff. And that's usually the biggest disconnection and the biggest shock to people's systems when I meet with them. So yes, meaning if you're sitting on the bubble or you're close, even if you don't know if you're close or not because you don't have any idea what it is, come talk to us. It doesn't cost anything, for one. And for two, the worst thing that might come out of it is you might walk out with a plan as to, okay, I need to go here, here, and here first. Then if X, Y, and Z all plays out, I'm going to be okay. But if I don't do A, B, and C, you're for sure not going to be okay. So I think it's very specific to each individual business, and talking to everybody. You know, we can loop in your accountant, your counsel if you prefer to have everybody. It's nice to have somebody outside of Jeff in the conversation, because it's very hard. Well, for one, you're very stressed when you come to meet me. So having another set of ears that's unbiased and not rate involved to help guide you through that is really important to have too. So I think talking to sooner, but this might be the bubble that gets popped right. I would say it's probably going to be a couple months before I start to see anything real uptake. But I think if people can talk to anybody sooner, it's ideal.
I remember, back when we worked together, and we'd sometimes talk about the nature of the files that you would see. You would sometimes make comment about how it was important for people to engage in conversations with someone like yourself early, before some of their options were off the table. I'm just curious if you could share with the folks that have joined us today, like, what you mean by that. I mean, what are some of the options that might be available early in the process that if you wait too long, slip away?
A lot of those is really just communicating with your secured lenders, or those unsecured ones that ultimately do or able to serve a judgment notice. Because once, CRA freezes the bank account or a landlord locks you out, we typically don't actually see a lot of landlords lock you out. They usually will cooperate with us because it ultimately is better to work with people. But and we would having those secured lenders enforcing their security. Once those have stopped, once CRA is on board, typically no lender will look at you because CRA just ranks ahead of everybody. So it's very hard to refinance or restructure during that time. Those secured lender, they're not willing to talk to you. Well, if they've taken away your main assets of your company, you no longer have a company to operate, and they're not really willing to do anything. We can put in place sometimes or work with the bank and with counsel on getting forbearance agreements in place. So it's an informal structure that lays out a plan that you're going to do X, Y, and Z. And if we can't do X, Y, and Z, we're going to do A, B, C. So it gives the bank some comfort to know that you've engaged people to help you through this, and it gives them, the bank, to know there's a plan, but it does put some deadlines to it. So it gives the bank some more comfort to know that regardless of whatever happens, there's a plan no matter what, and third parties assisting these people through that. So there's look-sees we go in companies just for the bank to give them some comfort, like, nope, your security is okay, they're going to be fine. They do need time, but they're going to be fine. So there's a lot of things we can go in and do. And help them structure an informal agreement as well.
So it sounds like whether it's insolvency or approaching your landlord or looking to secure deferrals to manage your cash flow, the message is pretty loud and clear to small businesses that if you're sitting there right now sort of paralyzed by fear, that's really the wrong thing to do. The goal here is to pick yourself up, get really proactive about this, start those conversations, even if they might be difficult, because they're going to be more difficult the longer you leave them.
Yeah, absolutely. And I get no one actually really wants to meet me, but I'm hoping we can maybe meet more on an informal basis. And if I have to help you more formally, I promise we'll get you through it.
Well, between the insolvency professional, the two accountants, the lawyer, and the landlord, I don't think any of us are everybody's first choice to go meet. Maybe Mitch, but I suppose it's we could be a support group if we stop being a panel. Two really practical questions, just shifting gears here pretty aggressively. First one for you, Cary. Given that everything's kind of gone virtual and we're not meeting face-to-face and signing papers and shaking hands right now, for small businesses that routinely engage in term sheets or quotes or contracts, etc., What are the rules right now? Are scanned digital signatures going to be okay for folks? Like, what's the standard right now to know you've got a good agreement in place with somebody, given that we're trying to, maintain social distancing and follow all the good rules?
So generally in the legal profession for at least a decade now, electronic documents signed by counterparts, meaning in different places, and a scan is exchanged, they've been valid and accepted for years now. There are different levels of witnessing that needs to be applied to certain documents. Normal witnessing for things like a will, where you do not need a lawyer, you do not need a notary, that can continue the same. We have an emergency directive from our law society on the signing of commission documents. So things that need a notary or commissioner and have a person swear and sign in front of them. Now, you can do that by video now for a temporary period. I don't know how long. And then the lawyer or notary simply needs to attach an extra document that makes it clear how the document was signed and how the identification was verified and those types of things. So the rules on execution of documents has been relaxed, but generally speaking, electronic documents were good before and they're good after. The only thing that really needs to change is you now can, by video, witness and commission a document.
Interesting, thank you. And Craig, a very practical question for you that came in. Now that we all find ourselves working from home, what are the rules around people's ability to now maybe claim some of their home office expenses against their taxes?
Well, the general requirement to meet is that your employer requires you to perform your duties from your house. And so CRA can be a little sticky with that historically because you in theory have to have a dedicated space for that office. So for example, if you have a shared living space, like Jeff, right there where you are, I see the plant behind you, there's a stairwell. That's not really a good space where you can define this is my home office. I
agree with that statement.
Yeah, it's maybe not the best setup for you either. But yeah, your employer has to sign a form that says, yes, you are required to incur these costs for the sake of your employment. And then you can claim a portion of your expenses for the period involved on a sort of pro rata basis. So if you're in a 10 by 12 room, and that's 120 square feet, I guess, and your house is 1,200 square feet, you see how my tricks are to get easy math, then 10% of your costs can be claimed for that period. But it's pretty, I think you're better off just to get reimbursed by your employer for things like that, say for internet, things like if there's an option that way, because generally when a corporation is deducting it as a reimbursement of employees' expenses, and those expenses are used for business reasons, their CRA is a little bit more lenient than employee expenses on a return. So it's in theory, it should be allowed because you're using your space for the purposes of your employment, but it can be a little bit dicey. So I just would be careful about that in the sense of CRA being picky. I'm hopeful that they're not as picky this year upcoming as they normally would be for employment expenses, but there are some limits in what you can claim to, which I don't have off the top of my head here, but it's a little sticky, unfortunately.
Thank you. So I have one question I want to ask just to the panel in general to close things off, but I just want to share fair warning. We're in the last 2 minutes here. If there's any more questions from the crowd, this would be a great time for the panel, and we might run 2 minutes over here, but we'll try to respect people's time. There was one question that did come in though before I ask mine, which was suggested as probably a question for you, Cary, and then others can chime in. We have a handful of clients requesting regular work to continue. This includes having our clients come to our office for a portion of their day, since our work cannot be completed over the internet or at a distance. Are we able to continue our work with clients while maintaining social distancing within our office, or do we have to turn them away until this passes? Now, unfortunately, not a lot of clarity in the question around whether or not they're an essential business, but let's assume perhaps based on the way the question is structured that they're more a run-of-the-mill sort of business like my business would be. What are the rules around that?
Yeah, so I suppose you hit the nail on the head there, Jeff. The real key here is whether or not they are public facing and whether or not they are essential. And it sounds like they are public facing, but the essential question is unanswered. If you are essential, deemed essential, like a law firm, and you do have to meet with clients, businesses, to my knowledge, can simply put into place some effective protocols based upon their exact work environment, whereby you can have social distanced contact with individuals to get essential work completed. If that is non-essential work, I would believe that you would not be able to do any sort of public-facing work at all. That is my understanding of the difference between the two.
Excellent, thank you. Now, we've come to the end of the panel, and I just want to end with one sort of general question for the group. We know that for the businesses that do get through this situation, many are going to be quite fragile on the other side of it. So organizations are going to be facing depleted cash reserves. Any of the safety net that they had in place is probably going to have been significantly utilized to get to the other side of the COVID-19 situation. And as a result, I would expect that we'll probably see an elevated level of consolidation and M&A activity. We'll probably see more business failures than we would normally see as well, as the normal course of challenges that people encounter as the market ebbs and flows. They won't be able to survive them because they have these reserves that have been drawn down. Question for the panel: what should businesses be thinking about as they start to emerge from the recovery to get back into that operational mode and slowly build up that safety net that they may have been building for a long period of time that is now basically evaporating? It's a challenging question, so I'm not surprised everyone has left this opportunity to answer.
I talked so much today, I think I should be deferring to the rest of my learned panel here.
Well, I think it's interesting that, when times are good and you're rolling along, I mean, you don't really appreciate the kind of business that you've built and the resiliency it has and what your customer base looks like and what your asset base looks like until you go through something like this. So I would take the opportunity while you're sitting at home, instead of being in your deepest, darkest despair, I would take this as an opportunity to really triage your business. Do a deep dive and say, okay, I have, in my instance, I have a number of assets. Which are the weak assets? What do I need to do to improve them? Do they need to go away? Is there a line of business I don't need to be in anymore? Is this a low margin business? And I think that I think if you do it right, you can come out of this a lot stronger than when you went in, and it's certainly a lot smarter, anyways. So, I mean, I think I said this last time, and I've used it. I've used this line several times. It's never waste a good crisis.
Yeah, I think that's excellent advice, and certainly one that we're sharing with our clients as well. That, I mean, a lot of folks are now forced to sit on the sidelines and have some time to reflect that they normally don't have when they're just chasing deals all day. And it's a good time to start looking at the business and looking inward. I agree. Any other comments from the panel?
Yeah, I can speak a little bit. I think as Mitch pointed out, this is a good time, and you said, Jeff, to reflect on where things are at. We're having to do things a lot differently in our business than we normally would, and I'm hopeful that we can use some of the lessons we're learning right now to sort of leverage them moving forward, even when we're back to somewhat more of a normal way of living, because there's lessons we're learning right now about how our systems and our processes, our weaknesses and what we're doing, that we didn't have a great plan in terms of going to a remote working situation in our firm, for example, initially. So we can maybe leverage some of those things moving forward. You have to be ready and optimistic to be ready to pivot as we come through this, because I think, to your point, Jeff, unfortunately, there will be some businesses that close through this, and hopefully that leads to more opportunity for those that do survive. But we got to be ready to do that when we're coming through. We can't be doom and gloom and focusing on things we can't control here. We got to be ready to pounce when we come out of this. And that's positioning ourselves well in terms of evaluating where we're at right now, where we can be as well. It's not just sit at home and watch Netflix all day because I can't do anything else, right?
Yeah, and the extra episode of Tiger King they released was just a total disappointment. So this Netflix thing, we've got to get on with it and get on to business again. So one last question before I thank the panel that came in, and I'll take a crack at it, is there was a question around, as some businesses are allowed to reopen as the recovery begins and others are perhaps required to stay closed longer, do we feel as though the provincial or federal governments will continue to seek relief measures for those businesses to help see them through? Obviously, right now, there's no clear indication that that's the case, but certainly there have been a number of waves of support here in Canada already. We've seen that kind of wave of support approach stateside as well. And I would say that if Premier Moe does in fact start to shed some light on what the recovery or the reopening might look like this week or next, that hopefully it does include some consideration for how they're going to continue to help businesses through that aren't able to get back to work normally. I think so far all the signs are promising. There's no clear indication that that's the case, but it's something that we'll continue to try to keep people up to speed on through these sessions and through our website, certainly Economic Development Regina's website, ours. First Group has some great resources. MMP's been putting out excellent resources as well. So, I mean, there's just a lot of information out there. Stay on top of it, stay informed, that's your best bet. I really do want to thank the panel for joining us again today. Craig, Cary, Mitch, Pam, it's been a real pleasure. I think when I compare the discussion today to last day, I think we've learned a lot. We're getting better at this. So, hopefully we can continue and hopefully people are finding some comfort in the information and some direction that they can use and make real. I want to thank everyone who joined us today. We had another great audience today, lots of wonderful questions. Again, the best way for these things to continue is to make sure that they're well attended and that we get good questions from folks, because that's the only way we know that we're actually providing any kind of value. So please help connect the resource to people that might benefit from it. Again, resilienceseries.com is intended to be a good place to find information about past sessions. The videos will be posted at the end of the day, as I mentioned, and also new sessions. We do have our next session coming up on the 21st from 9 to 11. Look forward to some new information about the topics we'll be addressing and who our panel will be for that session. And we expect to have the sign up available by day's end. So thank you again to everyone for joining us. Thank you to our community partners for their support in helping bring this together. And certainly thank you to our panelists for their great contributions today. With that, we'll sign off and wish everyone a good day and good luck as you continue to navigate these difficult times.